Hey guys, Stockaholics here. Thanks for being here today. Today, we will be looking at Q3 2020 for tankers. We'll be looking at what's going on, particularly from the perspective of these shipping companies. Part 1 today will be focusing on product tankers, and Part 2, coming soon, we'll be talking about crude tankers. The reason I am separating these into two separate videos is because I think there is likely some divergences that may be coming in the industry. So if you find this information useful, I would greatly appreciate a like. And if you would like to see more content like this, click subscribe. All right. So these insights today are coming primarily from these three companies' conference calls. I listened to TORM, I listened to Scorpio Tankers, I listened to Ardmore Shipping, and I wanted to kind of see what these shippers' perspectives was on this quarter, yeah? So TORM did the best. They had a positive earnings per share, likely because they had a lot of charters vessels, and Scorpio and Ardmore, which probably relied more on the spot market for Q3, did quite poorly with negative 37 and negative 20 cents each. TORM will be receiving a honorary pirate token for this quarter because they have successfully repelled a pirate attack, which I thought was hilarious to hear about in the conference call. So they TORM is the winner on the pirate coin for this quarter. All right. So I'll be talking about the shared ideas from particularly these three individuals, the CEOs of these companies. And as you may notice, the shipping industry tends to give people a receding hairline. We'll be talking about their short-term sentiment. We'll be talking about the second wave of the Wuhan virus and its impacts on this industry. We'll be talking about the gentle buybacks that we may see from these companies. We'll also be talking about ton-mile increases, which was a big theme for all three of these conference calls, and why these guys seem to be bullish in the long term. And also, the main reason I'm still involved in this industry is the aging fleet and low order book for these vessels. So this is kind of the theme, I guess. Kind of at least in the short to medium term, where we are in Q3. And I would say that all of the shippers in these companies were cautious, but they were optimistic, yeah? So this is taken from TORM's slide. And what this is showing us is that in the beginning of the year, starting, around the Rona, we had that big contango situation, which led to some extremely high rates. Towards the end of Q2 and the beginning of Q3, we saw kind of the opposite. So we had to draw down on that excess supply. Now we're also starting to see the stocks build again because of some of the shutdowns in Europe, but these aren't going to be anywhere near the level that we saw before, likely because the refineries have adjusted their outputs, right? So this is kind of the theme of the year and kind of where we are now, right? So I guess what shippers are really looking for now is not another contango situation. So if you're hearing people that are really bullish on being in the oil tankers for contango again, I would suggest that it will be unlikely. What we really need for products and crude going forward is for a normalization in demand. Now, right now we're at about 95 million barrels per day of demand. We're actually really close to pre-COVID levels, and I'll show you guys a little bit later. This is coming primarily from the east. So a lot of the eastern countries, they're at almost or already at 100% of the oil demand that they were last year. One of the shippers, Robert Bugbee, he was a little more bullish than the others, and he liked to remind us that there will be a winner and there will be demand for products, and especially heating oils going forward. But as we know, there is a second wave among us. And we are seeing a second wave of shutdowns primarily in Western countries. This will lead to continued contraction in these economies, which I think is personally is suicidal, but that's my opinion, and continued demand destruction for oil. So the longer these companies or these countries stay shut down, the worse that's going to be for oil demand, right? And like I mentioned in the last slide, contango like we saw in Q2 is not likely because refineries have reduced output and they've anticipated these kind of shutdowns this time around. We may see a weak Q4, and this is usually the strongest season for tankers, if you remember. It's kind of the opposite this year, where we saw a really strong Q1 and Q2, but normally it would be Q4-ish, Q1 that are the stronger seasons for shippers, oil tanker shippers. And like I said in the last, like Bugby, he's the eternal bull, still buying call options for his company. We still will have a winter. And I'd also like to mention that there's a big deviation from the East and the West. Originally in the year, we saw that everybody was extremely cautious about the Wuhan virus, but in the West, we've succumbed to. In the East, they said, no, we're going to move on. We're moving on. We're going to open our economies back up. So another theme that we've heard from all of these shippers are gentle buybacks. So like I said before, they're cautious. There's still a lot of uncertainty around COVID. A lot of them have already approved buyback programs, but I wouldn't expect any of these companies to spend the entire amount of those programs. They do all understand that their stocks are undervalued. They understand the concept of net asset value and those kinds of things. But the cash on hand from the strong year behind is not likely to contribute to the full dollar amount of these buybacks. And again, that's because they're cautious. They don't know what to expect. Although we've seen oil demand increasing, for the shippers to be robust and have solid cash flow, we need 100% oil demand to return. So if they're buying lots of shares back and ultimately they're going to have negative cash flow, that's not really something that they can do in a large amount, right? And we've also seen in the past quarters that they've been repaying a lot of debt. So and they also are going to be storing that remaining liquidity, I think, for uncertainty ahead. So there's also been this idea, especially from analysts. It seems like I've heard it on a bunch of calls. They're like, have you considered sale of your ships to fund buybacks, since they know the shares are such a discount compared to the actual value of the ships? And some of the shippers kind of entertain the idea, but I wouldn't. They're not going to do it. I would be shocked if they do that. They're in the shipping business. They want ships. They're not going to sell their ships, especially if they are bullish in the coming months and years on the industry, which I believe that they genuinely are. Yeah. So again, there will be some buybacks, but it's not going to be from the sale of ships. If that happens, let me know. I'd be fascinated. But there will be some, I think, and they'll be small and focused, and they'll kind of be putting in kind of like a psychological floor on some of these stocks. This was something that they were all extremely bullish on, and I have read in some other places that they've been saying this stuff for a while. That hasn't really significantly materialized, but it is something to look at, and I thought it is important if it does come to fruition. Yeah. So what this is showing us in this picture here, this is that there's going to be likely going to be refinery dislocations. And that's because a lot of older inefficient oil refinery product refineries will be shutting down, and a lot of these, you'll notice, are coming from the West in North America, some in Europe, a couple in South Africa, and some in Asia, Chinese coast over here, and Australia, right? So a lot of these, we're seeing some closures, but we are seeing some new refineries coming online in different parts of the world. So what this is going to end up likely doing is it's going to be shifting where and how where oil is going to be shipped from. And then what it's likely going to do is increase the distance that these ships will have to travel. So and what I also believe, especially moving forward in the coming decade, that North America is becoming more and more energy dependent once again. So with this is really bullish for product tankers, because they're going to have to ship all of this oil from the east and ship it much longer distances to the west, instead of just the United States being a net exporter of oil. There is one nasty surprise though. If this is expected to come online in 2022, this will be an extremely large refinery, and this does have kind of a negative outlook for ton miles, because this is kind of it would reduce a lot of the distances in those deliveries. But it's been coming for a few years, and it's not here yet. Now, although it is a extremely large refinery expected to come online in Nigeria, it doesn't account for all of the losses in all of the other places around the world. So there is ultimately anticipated a positive ton mile increase in the coming years for product shippers. And like I've mentioned before, the main reason why I'm bullish on the industry is I like to keep it simple as I can, is that the tonnage, the growth in the amount of ships available has not significantly changed. Although these companies made great profits in the last year, there are still not a lot of ships being ordered. You can see in 2020, it's at the lowest that it's been over the last 5 years. Yeah, and this is going to contribute to an older fleet, and it's going to contribute to, especially as we see demand return and likely increase over the coming years. It could be a really good 5, even a decade, I think, for shippers. I've mentioned before that there's a lot of ships that were produced from around 2004 to 2009, around those years, and in the next 5-10 years, those ships are going to be scrapped. So or will be on the chopping block. So the more time that these shippers do not replace ships, is the more time that you're likely to see a large bull cycle. So although shippers have made great profits in the year, much has not yet gone to the order book. Now, you gotta watch these guys. You do. They're gonna let you know all the good things to anticipate. They will not share some of the bad things in these industries. That's for us to figure out and determine as investors. Yeah, and like Ronald Reagan says, trust but verify. Whatever it is that they're saying, we need to go and investigate independently. We cannot take their word for it. The shipping industry can be massively detrimental to an investor if you don't find these headwinds and get out of the way should they materialize. So don't trust a shipper. We got to keep watching that order book, although they haven't been ordering anything yet, and they are still wary and cognizant of the IMO regulations coming. If that stuff changes, that's going to change the general thesis for product tankers. So again, expect part 2 of this coming soon, where I talk about crude tankers. See you soon.